Welcome to Inside Houston. My name is Shad Bargany. This evening we're going to be talking with Stephen Harris with Harris Housing Advisors. And we're going to be talking about the MCC program, which is a program to help first-time home buyers be able to get into homes and keep their notes low. But you know, with all the flooding in Houston, I thought it was apropos to take some time and just give you a few things that are going on in regards to FEMA and Small Business Administration. One of the things I'd like to talk about this evening is how much money is available under these programs. If you own a business, there's up to $2 million available for your business. If you are a homeowner and your home has been destroyed or heavily damaged, there's up to $200,000 for you. If you've lost content coverage or you are a renter, there's $40,000 available for you. All of these on low interest loans as low as 1.75 to 3%. The other thing that I would like to share with you is that FEMA are giving grants out up to $33,000 that you do not have to pay back, but you have to fit in a certain box. If you don't qualify for the FEMA loans, you go over to Small Business Administration. If Small Business Administration don't give you a loan, then you come back to FEMA, and then FEMA relooks at your case. The other thing I'd like to share with you is that under these types of disasters, if you've lost your house altogether, don't want to build it back, there's one loan available to you. It's called the FHA 203H program. FICO scores as low as 580. It's used during a disaster relief program. I've in the past have sold clients during disasters who bought homes. It's 100% down, no down payment. On these particular loans, you have up to a year to take advantage of it. You can use it with the 580 credit score. This is called an FHA 203H program, and it only is used during an exact disaster. So we would like to let you know that these types of programs are available. I wanted to give you some sense of understanding. I've also been emailed and texted about renters. Am I still supposed to be in my lease? What happens if my place is uninhabitable? If your place is uninhabitable, your lease is then canceled. If your place is not uninhabitable, but you've lost your job or loss of income, you're still required to make your lease payments and any late charges that may be there. But you might want to check with your landlord to see if some of that's being waived. The only thing that cancels your lease out is if it's inhabitable. At this time, we're going to roll right into our guest, Steve Harris. Steve, welcome.
Thank you,
Welcome
Chad.
to Inside Houston. I'm glad you're here. And we've known about this particular program for many, many years. It's called the Mortgage Credit Certificate, known as the MCC program.
Yes.
I'd like for you to just kind of tell us what the MCC program is.
I would love to do that, and Shad, you've been such a good proponent for so many
Years. It's an honor to be here with you.
Well, thank you for coming in, Steve. Appreciate it.
The Mortgage Credit Certificate program is one that's been available and offered for over 20 years. It's a program that provides a direct federal income tax credit, not a deduction, but a credit equal to currently 50% of the interest paid each and every year for the life of the loan, up to a maximum of $2,000 per year. The difference between a tax credit and an interest deduction is always vital to know, because this is the power of the MCC. A dollar's worth of tax credit, they get a dollar back in their pocket. An interest deduction, which is also valuable and is a good benefit.
The reason
to
people buy
homeownership,
homes, yes.
A reason a lot of people buy a home, and we hope that's protected. A dollar's worth of deduction, depending upon tax bracket, can be worth 15 to 28 cents to a home buyer. So a tax credit is money in your pocket, dollar for dollar. An interest deduction is much less than that. The interest paid is first used as a tax credit. The remaining amount of any interest you've paid on your mortgage can still be used as a deduction.
So you get
still
both of
that.
them.
You get both. You don't get to use the same dollar twice. A dollar can either be for the tax credit. The remainder above $2,000 is used as an interest deduction.
Let's put it in perspective. If you get a tax credit for child care, this is the same type of program, but it's for home ownership.
Same type of program, the same as the home ownership tax credit we had a few years back that was for first-time home buyers, but this is through, in our case, the Harris County Housing Finance Corporation. Harris County Housing Finance Corporation has been in business since 1980, and they have assisted home buyers with over $500 million for tax credit for home ownership. They've done a like amount in bond programs, and they've even financed apartment houses. So they've done apartment loans.
But the MCC has been their strongest benefit, the strongest program we have offered, and it has been offered continuously for over 20 years. We have discrete programs. The current program started in 2015. We have plenty of money through the end of the year, and we expect to have a new program for next year.
You know, reason this is so important, guys, is that it lowers the effective interest rate. Steve, give us an example of just a brief example of what the effective interest rate is. You got interest rates right now at 4. I think you may have an example there. Won't you tell us?
We've got a wonderful example of
$120,000 loan at 4%. The home buyer would pay $4,800 of interest. At a 50% credit, that would entitle them to $2,400. But as I say, we're capped at $2,000 per year. So $2,000 is a tax credit. That's
money back in their pocket. That means of the 4% interest paid, they're getting back 1.5 of that. So they're really only
paying a net interest cost of $250. The mortgage rate, as contractually indicated, is still 4%.
They pay the lender based upon that 4% mortgage, but they can increase their take-home pay or increase their tax refund at the end of the year, depending upon the treatment that they opt for.
So you have the ability to be basically up to $166 a month credit based on how much interest you pay, right, Steve?
Exactly right.
So if you had a $1,000 house note, then you're in effective paying $850 with this particular program. And I'm going to recommend, and Steve is too, is to ask your accountant to sit down with you and look at how many allowances that you're going to need to be able to use this program effectively. Steve, let me ask you this question here. Who's eligible for this program?
This program offered by Harris County Housing Finance Corporation, and there are other programs. I know you're active in Fort Bend County. City of Houston does not have a program of their own. We're still working with them to try to encourage them to do that. And there are other programs throughout the state. But our current program that we're talking about for Harris County, and for which our firm serves as the ongoing program manager, is available anywhere within Harris County, but not including the City of Houston, and also not including Baytown, Deer Park, Pasadena, LaPorte, Friendswood, Missouri City, or Pearland. Now, those cities are all part of the Southeast Texas Housing Finance Corporation jurisdiction, and Southeast Texas offers a program very similar to this with a 50% tax credit as well.
Do they have to be a first-time home buyer?
You need to be a first-time home buyer unless you're in some very limited specified targeted areas, or if you are a qualified veteran, someone who has served, been honorably discharged, does not need to be a first-time home buyer.
Okay. We're talking with Steve Harris. Steve, give your phone number. There may be some lenders watching us tonight.
Sure.
Maybe some realtors watching us tonight. Maybe some consumers, and they may want to find out which lenders are using this program. So would you please give us some numbers?
Let me hold this up, but our phone number is 713-260-3553, or we certainly have all of this information available at harriscounthyhfc.org. So on the internet at harriscounthyhfc.org, or call our office hotline 713-260-3553.
Okay, let's talk about properties. What properties are eligible for this? In Houston, we've got condos, we've got townhouses, we've got single family, we got duplexes. Which properties are eligible for this program?
Well, Shad, this is available for any program and any type of real estate. It can be used for anything which is a residence that is taxed as real estate.
Okay.
So a single-family home, a condo, a townhouse is all eligible. And in fact, the terms are those that are specified by the lender and by the terms of the mortgage itself. The MCC is not a loan per se. It is a companion to any loan that our 35 lenders offer. So certainly an FHA loan is the most predominantly used.
But you could
loan.
conventional?
Can be used with conventional VA.
VA.
It can even in rural areas be used with the
USDA program.
programs,
Okay.
which is great.
Well, let me ask you this question, Steve. What about down payment assistance? Any of the programs have down payment assistance? With
I am
this?
so glad you asked. We've just stickered our brochure to say a new $1,500 grant. So the program now comes with a grant, but we also offer that we try to encourage borrowers that there are 3 different ways they can receive assistance. One is a down payment assistance grant that does not have to be paid back. 2 is the tax credit up to $2,000 a year for the life of the loan, or the tax credit with the grant. And there are really 2 forms of grant. As we first did this program, it was up to 6 points of down payment assistance through the 5-Star Advantage program. And that is a just wonderful statewide program that provides a down payment grant that doesn't have to be paid back up to 6% of the mortgage. That is for the life of the loan, and it is built into the mortgage rate, so there's a slightly higher mortgage rate in order to defray that down payment assistance. For anybody using an MCC, whether they try to use that special loan program or not, they still can use the $1,500 grant that defrays most of the cost of the MCC itself.
You know, I wanted to share something with you. You remember a few years back when President Obama came out with the $8,000 tax credit? It spurred people purchasing homes. This is the same program, but instead of that one-time $8,000 tax credit, you get a life of the loan as long as you're paying interest tax credit.
That's right.
That's what makes this so powerful for you, the consumer. So, you know, Steve, as we move forward with this, you talked about the different areas that are available for this particular program. Let me ask you something here. What would you say that you may hear people talk about layering? Is layering, would you kind of explain it to us? Because
Sure.
some lenders would come up with this mortgage gobbledygook, what is layering? We don't layer. What is layering? So the consumer would understand that
Yeah.
maybe they need to be looking at a new lender, or that maybe they need to be talking to another loan officer.
Okay, yeah.
Tell us.
A qualified lender certainly is aware and offers all or most of these programs. Your top realtor here in this community, Shad Boggany, knows about all these programs, and so a good realtor is key to your search process as well. You need to be armed with a good qualified lender and have a realtor driving you around to show you the properties available. And let's get moving quickly, because I think that with all the shortage of housing, we're going to see a real increase in home prices. I think it's going to become a real problem. There's going to be more of a shortage than ever.
But this program is a companion to any loan that you make, and is something that can be used for properties throughout the city.
Yeah, and I truly believe, and I agree with Steve, that you're going to have an increase in home prices. Those areas that flooded, you're going to have a decrease in home prices. Those areas that flooded many times, you're going to become land value. So, but the good thing is that time heals everything. Wouldn't you agree, Steve? And at some point in time, those properties are going to come back up in value. And these programs allow you, if you've been renting an apartment and you're tired and you've been flooded once or twice, it may be time for you to purchase a home. And Steve, what should they be doing when they're meeting with their realtor or their lender? Should they be asking them, do they have this program? Because what I've found about certain lenders and builders, they don't tell you about this particular program unless they need it to help qualify you with income.
Well, I'll tell you, my affection for our lender partners is really great, and we are blessed in Houston to have an awful lot of good lenders who really put their clients' interest first and who really watch out for their client. It's educational programs such as Shad has sponsored and participated in for so many years. Another colleague of mine is regularly active at different events, educating the public through the National Association of Hispanic Real Estate Professionals, through the
Asian American
Association of Black Realtors. We've got just an ongoing amount of community outreach, but education to the home buyer is vitally important. Some of these programs even offer or require a home buyer education online or otherwise in order to become fully versed. But our key is that a successful realtor, one that you want to work with, is knowledgeable and will offer to you information
And will steer and guide you the right
direction to be in touch with lenders, as you've got a list of lenders that you can recommend. We don't really recommend lenders, but we do have all of our lenders on the website, Harris County HFC, who have been fully trained in our MCC program. They are knowledgeable, and we stand behind them. We make sure that they are well trained and available to help the first-time home buyer.
All right. We've been talking with Steve Harris with Harris Housing Advisors, and we're talking about the MCC program. And we just wanted to, last week when we did the show, we talked about how to increase home ownership. Now, I just want to show you how to do it. There are lots of programs out there for the first-time home buyer, and we want you to continue to watch this program. We're going to bring you these types of programs. We're going to take a quick break, and we're going to come back with Inside Houston.